180 now. You've got the November JLR UK sales data coming in, and that's a meaningful uptick, at least on a year-on-year basis. We'll have to call out the month-on-month data as well. We've got Abhiram joining in on the show right now to talk about what he's making of the markets. Abhiram, hi, morning, good to have you on the show. And it almost seems like after the state election verdict, there's a re-rating of sorts for India. You think time now for the FIIs as well to make a comeback?
Thank you for having me. Well, I think FPIs have been quite active in the market, especially since March. I know we've had our ups and downs around those flows, but broadly they have been bullish on the country. And it kind of goes without saying that India also had a relative advantage compared to the other emerging markets, especially China. And it's fair to say that we got a disproportionate amount of flows from there. So overall, I think investors are still quite bullish on India going into next year. And the macro picture is quite benign, quite favorable, actually. The only thing that may be a little bit questionable here are the valuations. But aside from that, it's really hard to see a big picture negative around India at the moment.
You know, it just takes back to the start of this year, maybe end of last year, wherein we were talking about how 2023 is going to be a year of very moderate gains for the Indian markets. We were talking about maybe, 5 to 7% kind of gains. Looks like we'll be easily able to beat that, while, of course, on a global, relative basis, we are still underperformers. But what about 2024? What kind of return expectations should have from the Indian markets?
Well, I mean, as I mentioned to you, I think valuations are fair, probably a bit too fair at the moment, or maybe a little bit on the expensive side. So I think there's some dislocations in the market. If you see the year that's gone by, like you rightly mentioned, large caps have significantly underperformed. In fact, the headline indices, which are Nifty and the Sensex, have underperformed most global large indices. So therefore, I think that the recipe is quite right, brewing correctly for a large cap outperformance next year. And we see this year mid and small caps have paced the large cap indices by maybe 20-30% at least. What we are seeing today is kind of a relief rally ahead, you could say, in the past month or so. Having said that, I don't think that this is the end of it. What we'll most likely see is that investors, again, going into early next year, thinking that maybe the markets have run up a bit too much. And there's a possibility of maybe a modest or a small correction that will form the base for more kind of predictable returns through the next 1 year or so. So I think the recipe is for large cap outperformance next year. I think India will still continue to do well. But a lot depends on how data in China is. And if that starts to improve, maybe a question about performance or underperformance may come in. But as I said to you at the start, the stars are kind of still favorably aligned for India.
Yeah, and it looks like that. I mean, today only you got the commentary from S&P, wherein they're targeting India to become the third largest economy by 2030 itself, whereas Moody's has actually downgraded the outlook for China. But just coming back to the question, Abhiram, what I'm trying to get from you is the fact in 2024, should one expect, 5 to 10% kind of gains for the Indian markets? Could it be higher? And I'm talking at the index level, of course.
Well, at the index level, I do think that high single-digit returns to low double-digit is a reasonable expectation. It's usually the long-term earnings growth for India. And if valuations hold up where they are, I suspect that's the kind of return we will get next year. But I'm actually more concerned about whether we will have the repeat of the mid and small cap outperformance, which I doubt will happen next year.
Okay, quite a few points really to probe about, upon over there. But let's talk about the large cap outperformance which you're betting on, Abhiram. Where within large caps do you find value on the table? I mean, to my mind, it really comes and boils down to those few odd large cap banks, which have been underperformers. And then when, IT perhaps, which no one, rightfully so, wants to look at right now. Or you think it's going to be a more across the board, broader kind of move within large caps?
I think you kind of mentioned the two things I was going to say earlier. So large cap banks is our preferred area. Obviously, it's a significant part of the index as well. And if you think that the index as a whole will return, let's say, a 10% or a little north of that next year, then it's unlikely to happen without large cap bank participation. I think you're starting to see that a little bit now. So large private banks is number one area. add a little bit to that would be selectively on insurance. On IT services, at least most of our interactions with investors or companies are suggesting a second half calendar year recovery. So I suspect investors will position for that maybe around March, April or so. So I think IT services is a sector everyone's very carefully looking at, even if they may not be actually buying it right now. And the third area that I think that will be quite positive next year is the overall industrial space. And I know within the large cap space, there are only a handful of names, but I think those are the ones that investors will focus on, especially around elections, and especially if there is a stability around the budget and the politics and so on and so forth. That will remain a longer term 3 to 5 year theme, but I think investors will look at that quite a bit. So just to round that off, large cap banks, IT services and industrials are the three areas that we are focused on.
And now let's talk about the other pocket which you're wary of right now, small and mid caps. Again, across the board, you think, they're going to come down, or within pockets where you think there is now over ownership and exuberance perhaps?
Well, I agree with the latter statement, which is that there's over exuberance in some names. And see, one of the good things that's happened in India is a lot of good quality companies have come to the market in the past, let's say 3 to 4 years. And they've proven time and again that their earnings and the quality of the business model is quite strong. So it would be kind of not right to say that there will be an across the board correction. I doubt that will happen. In fact, I don't even know if there will actually be a proper correction. What I do think will be that those indices may take a bit of a break, but good quality companies that have been delivering on results, whether they are large, mid or small, I think will continue to do well.
Right, interesting. The other thing I also wanted to chat about was, since we are on the subject of those frothy pockets within the mid and small caps, is it the obvious ones, your defense, power PSUs perhaps, railways to some extent, although they have already come off from the year highs, or do you think it's going to go deeper than that?
Well, actually, if you look at the spaces that you mentioned, we actually still like many of those areas. For example, railway capex is probably one of the most positive areas today in the market still. At least the fundamentals are still extremely favorable. The other one that you mentioned, defense, and again, an area that we still think has got room to run. So I guess what may happen on the other hand is what we saw in the last 6 months or so is that the rising tide kind of lifted all boats, and where there isn't sufficient justification for that outside of these areas, or where there's not a fundamental backing, I suspect those stocks would probably tail off or maybe even correct a little bit.
Okay, just looking at what else is actually holding out in the markets, and Abhiram, have to talk about the performers as well. Not negating the last 2-day moves, but the Adani group of names, penny stock, and that's been holding out well. Not just that, you've had a stupendous run in real estate, in the entire auto theme as well. You think these are themes to hold for the long haul?
For the long haul, yes, but when you speak about autos, I think that what we've had, good numbers have come off a low base compared to last year. And we also saw buyers delay their purchases this year because it looked almost as if, especially in two-wheelers, for the first 6 to 7 months of the year, there was not really much demand. And a lot of that got bunched up within the holiday period or the festive period. So I suspect some of that will tail off. And so if we were to look at the economy and the way purchases are happening, a lot of it is still very K-shaped. So therefore, the affluent India theme is still playing out, and the affluent are actually spending, and their basket of goods actually includes four-wheelers rather than two-wheelers. So I think what may happen is, going forward, investors will start to look much more at four-wheelers, where the story from a long-term perspective is a lot more justifiable. So within autos, we have a clear preference for four-wheelers over two-wheelers, and especially across the consumption basket, actually more for luxury rather than mass consumption.
It's affluent India which seems to be buying right now, and that's the theme Abhiram suggests to play right now. So thanks, Abhiram, for making time and speaking with us. Appreciate you joining us on ET Now today. But